Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the YouTube series. For today's video, I want to do a quick update on the portfolio, give you guys an idea what's been happening over the last couple days of trading, and then I want to focus on one of the contracts, options contracts that I'm rolling forward. I've highlighted this on a couple prior videos of rolling versus buying back the contract and then selling off again. I have some put contracts that I've been rolling forward. And there is some difficulty when you try to buy and sell the contract at the same time, rolling it versus buying back the contract that you sold off and then selling off another contract at a later point. It's much easier to execute. Yes, it's more of a gamble because the price of those options can change. We can also make some money as well. And for today, I want to do a Tesla put contract as an example of doing that. Before we do that, let's take a quick look at the portfolio. As you can see up on top, not a lot of movement overall, but a lot of intraday movement here. One point getting up to almost 446,000, 446, 497. Pulling back here in afternoon trading down to 423, 422 or so. And then in afternoon, later afternoon trading, after hours, getting back to where we started. So 0.00% and just $14.26 in the red. A little bit longer term perspective here. 1 week up, or excuse me, down 3.23%. 1 month as well, down 4.8%, and 3 months in the green, but only slightly here, 1.97% in the green, 8,353. A little bit interesting to see. Robinhood does have a new retirement account. If you guys are interested in shielding some income from taxes, that's a great vehicle to use. I think you also get a 1% match if you put funds into that retirement account. And then going down to options here, you can see the Tesla contracts for this week are gone. I bought those back, which we'll be discussing. And then I have a few contracts up on top with Ford Motor Company that I'll be rolling. You can see I did roll 9 contracts forward here in the middle. A Ford $12.35 call, 3/31 expiration date, 9 sells, and I'll continue to do that tomorrow and then roll, or as we do with the Tesla contract here, buy back those contracts and then sell off again. But most of these, if you take a look, are just a penny at this point. So rolling these will be fairly simple to do. But let's go ahead and take a look at Tesla. If we scroll down, you can see all the cryptocurrencies here. Very large gain for most of the cryptocurrencies today. Where is Bitcoin actually? Getting up over $28,000. If you guys remember, I recently put out a video kind of messing around doing some Dogecoin trading, cryptocurrency trading. Made a large trade, which would have been a much better trade if I would have waited to sell that off. Let's go down to Tesla. That's in my watch list on the bottom of the screen here. So currently trading 192.90. Just with my portfolio as well, you can see kind of a large uptick in the price and then pulled back here. And this is great for what I did today. When it was increasing here in the morning, I bought those contracts back with the intent to then sell off put contracts in the afternoon. Got busy, was not able to do that. Hopefully I can do that tomorrow. But let's go ahead and take a look at the bottom of the screen to go over exactly what I'm talking about here. So on the bottom of the screen, you can see in the middle a Tesla 177.50 put sell 324 for 16.05. That's when I sold off these contracts. So I sold off put contracts, 3 contracts, $5.30 per share, 100 shares per contract, so 530 per contract. Adding that up, it's 16.05. So I got that credited to the account. If we go back to the history here, and then I bought those back today, as you can see, right under your history. Tesla 177.50 put buy 324. So I bought those contracts back. So essentially, the overall trade was 16.05 credited to the account, and then I had to spend $33 to buy those contracts back. If we go into the watch list, there's also an options watch list that you can put particular trades on. So I was going to roll into this Tesla 180 put here. You can see the price of this contract varying dramatically throughout the day. So if I would have rolled the contract, I would have had to buy back the contracts, as you saw before, for $33. I did that contract right around 9 a.m. or so, and then I could have sold these contracts off for $151. So you can essentially think about the profit. Let's just make it easy. Let's say it's $163. So I had to buy these contracts back for $33, as you saw on the prior screen, and I could sell them off for, let's say, $163, for example. I'd make $130 on that trade. But I have to do that at the same time. I have to buy the stock back and then sell it off at the same time. What I did, however, was sell the contract at a later point, or I would have sold the contract at a later point today and then bought it back earlier. So I would have bought it back here when the price of that contract was low as well. So I could buy it back for $33 and then wait and then sell off here later in the day, if I could time it correctly, then I could sell these off for 363. So you can see the potential benefit here. Here it'd only make 130 because again, I'd have to sell these off at 160 or so. Here I could sell them off at 320, 330 or higher. So that's the benefit about doing two separate contracts rather than rolling at the same time. If I roll at the same time, you have to buy the contract back and sell it off at the exact same point. And sometimes it's hard to find those contracts at the price points you want. What I did was simply buy back here when those other put contracts were lower price, because the price of the stock was going up, those put contracts were going down, as you can see, and then selling those off here at a much higher price. Again, it was a different contract, but the price trend here would be the same. So those other contracts I could buy back at a lower price, and these contracts I could wait some time and sell off at a higher price. Yes, it's a gamble. This could have been trending down the opposite way, and I could have lost on some potential profit. But I found that trying to roll in Robinhood sometimes is very difficult. The trades take quite a while to execute, and sometimes you have to put the price way under the current difference between buying back the contract and selling off a new contract. I hope that makes sense to everybody. Kind of complicated, but essentially you're doing two contracts instead of doing one contract at the same time. Yes, rolling is quite easy. If we go back to the top of the screen here with options, just as an example, if I want to roll this Ford contract, I would go trade, roll position, and you can see up on top it already has the contract to buy those back. Then I'd simply sell a contract to sell off a new contract. Let's say April 6th, for example, I want to do 11.50. You can see it's 37 cents. So overall, you can see the difference I would make is 36 cents. Buying back the contract for a penny, selling off the new contracts for 37 cents. And the difference is at 36 cents. But you have to do that at the same time. Again, trade, roll position. You have to do both of these contracts as a pair. Versus, let's say I go back to options. Instead of doing roll position, I simply go view all options. Go to the current option. Up on top, select buy back those contracts. And then I can just individually buy these back. These are just a penny. So depending on how many contracts I want to buy back, I put that in there. I go through and do this order, and then I would go back to this screen here, switch it over to sell, and then sell these at a later point. These are call contracts, but the thing is the exact same. And then I could pick another strike price and then sell these off as a separate contract. Simply put sell, 222 for example, and then sell these off at a later point. So doing two contracts rather than doing one contract at the same time, which can be quite difficult to execute. So again, I hope you guys followed that. It gets a little bit complicated with options. I simply do selling of contracts. I think it's the easiest way to get into this. It's, I think, the less risky way of doing contracts. If you buy contracts, the price of the stock has to move to make money. If you simply sell off put or call contracts, even if the price stays the same, you still can make money because of the time difference. You basically will get money as the contract nears expiration because the people who bought the contracts cannot make a profit on those, and they simply expire worthless. You keep the premium, and then you repeat the process the next week. So again, just wanted to quickly go through that, how I'm doing the rolling of my contracts, and then also a quick update on the overall portfolio. Again, ending the day right where I started, around 431,500. So with that, I'll end this video. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until the next video, we'll see you then.